Good evening, everyone. I hope you enjoyed today's session and the presentations from all the 5 startups. Uh, Firstly, thanks a lot, Kerala Startup Mission, for giving me an opportunity for being here. So today, I was given this topic, developing the next generation digital experience with open banking. I mean, uh, one thing which kept me nervous from the morning till this session is like, what do I talk basically on this particular session? Because especially in 20 minutes, talking about this particular topic related to digital experience was something which was like, really made me nervous, but I actually thought like I'll give it a try. So, firstly, I'll talk about what is open banking. I understand that for many of you who are in the fintech industry understands more about open banking, but what does it mean for a layman or a common man? So open banking is nothing but it is it is the technology or the enablement of like banking services wherein banks and financial institutions, they expose their infrastructure for other businesses. It could be a startups, it could be fintechs, or it could be corporates to launch or offer various banking services. This is called open banking. For example, in the earlier days of fintech or banking, only very few privileged companies got access to banking services. Let's take an example. If I was starting open as a startup like in the early 2000s, and let's say if I had to partner with a bank, I may not even get access or entry into the bank because it was like probably a Oracle or a FlexCube or the larger companies always used to get access to the banks for various reasons. Now, various standards and formats came up over the period of, over the last few years, primarily driven by the digital adoption as well as new business models. As new business models starts emerging across the world, a lot of regulators and the players in the fintech ecosystem, they realize the needs for common standards where financial institutions and the banks can expose their infrastructure to other third parties. And this reflects open banking. In markets like Europe, there is a PSD2 regulations, which is the Payment Service Directives 2 guidelines, which was, I think, released in 2017-18 period, where it was mandated for banks to expose their APIs in an open banking format to other third parties. If they don't comply with it, they will lose the banking license, right? Now, this led to a lot of like adoption of or lot of like evangelism of open banking in other parts of the world, and regulators in other countries also start talking about open banking. Now, why do we need open banking, right? We understand now that, okay, what is open banking? Today, when you have access to the customer's financial data, there's a lot more value that you can add to your product. Just take an example of an e-commerce site, let's say an Amazon website. When you're shopping on Amazon and let's say if Amazon has access to your past, not for Amazon, let's say you're actually on a travel portal like goibibo.com or makemytrip.com. And if the platform has access to your past 6 months transaction data or your bank statement, maybe where you have the way in which you spend or the previous travel information that you had made, this can actually help Make My Trip to probably offer maybe like a better value on your product. It could be like a buy now, pay later, or they can actually partner with an NBFC and convert this into a EMI. Now, traditionally, before the open banking ecosystem evolved, Make My Trip could not get access to this customer's bank statement. But with this open banking framework, now a customer if the customer authorizes a platform like a Make My Trip, they can actually access the customer's bank accounts. So this is just one of the examples. Or this could be, the other example would be a company like Open. Let's say today we are offering digital banking or SME current accounts to small businesses. We don't have a banking license. So how do we do that? We partner with a bank. So the bank exposes their license and their infrastructure, wherein I am able to offer my customers their balance, their statement, enabling their payments. How is it possible? It is possible because the bank has exposed their API. So these are like simple examples of how open banking can benefit new innovations either in fintech or even for other companies to offer more value to their customers. Now, typically, while I said that markets like Europe have made it mandatory, and then there are markets like Singapore where the regulators have always been working on this open banking regulations, because when a third party is accessing a customer's bank data, definitely there are a lot of things which you need to be taken care, including like the privacy, how do you ensure that the party can be trusted, and a lot more aspects of it. That's why they are trying to come up with these uniform regulations. So in markets like India right now, we don't have open banking regulations. We do have certain guidelines that exist wherein the RBI has actually come up with a lot of guidelines on how third parties should access a bank's infrastructure. We also have this account aggregator license, which was issued by the regulator around probably, I think, 2 years back, which is now these licensed account aggregators, they are now working with banks wherein, and on the other side, like other third-party platforms or fintechs can now partner with these account aggregators and offer a functionality wherein they can access their customers' financial data. But this is right now just limited to probably the bank statements or the bank account data, whereas open banking is much more broader if you really look at in other markets. So now we understand what is open banking and what is the need for open banking. Now the third part I'm going to explain is while we have talked about the need, more specifically, let's say, how does it really add value to some of these businesses, the examples which I took, right? So specifically in the Indian context, in the last 5 years, especially after the demonetization happened in 2016, we see a rapid adoption of digital payments. And obviously this was fueled by a lot of other factors like the low-cost data by networks like Jio and the rapid adoption of interfaces like WhatsApp. Now, this has resulted in, this also has resulted in a lot of startups focusing on offering financial technologies or so-called fintechs, whether they're offering lending services, they're offering buy now, pay later services, they're offering credit cards. For example, most of you would have heard about this fintech startup like Slice, which is offering credit cards, or there is Five, which is offering consumer savings account, which are all non-banks. Now, all of these startups need to today, when they're actually working with banks by virtue of getting access to the open banking APIs, this leads to a better consumer experience. Today, when you are actually trying to make a payment at a retail store, the first thing that you come through your QR code, you would always prefer a Google Pay or a Phone Pay compared with your existing bank's UPI application. Your existing bank's digital application already has a UPI payment option, but what comes to your mind is probably a Google Pay or a Phone Pay or a Paytm. It's all because they're able to deliver better user experiences or UX by accessing this data, because probably the biggest challenge traditional financial institutions faces is access to the legacy technologies. Most of the times, the technologies were provided by the traditional larger the legacy core banking companies or the internet banking providers. And there is a lot of challenges in terms of creating better user experiences, because earlier days of banking, the focus has always been on creating a basic trust. So you may not, you would not have find applications where if you wanted to probably, if you lose your debit card, you always need to call up the bank's call center, wait for 20 minutes on the line to connect to a call center executives. But today, you would find that a case in some of the, we can actually go to our own app and then request for a new debit card and even deactivate an existing thing. So when third-party non-bank entities started building better user experiences, this also forced the legacy financial institutions and banks also to come up with better experiences. And now everybody, whether it is a fintech or a bank, they always now think about these experiences when they are trying to rolling out the products. And it's very commendable to the kind of products that now even the traditional banks are actually rolling out. For example, SBI, or those kind of even other banks, like the banks like Federal Bank or the Yes Bank, where they're also equally competitive enough for coming out with the products which is focusing on the user experience part of it. Now, I missed an earlier part, which I was actually trying to come up with the link with the demonetization part. So what I was telling is that the rapid rise of this fintech adoption, that not only banks, but even startups and non-banks can roll out various financial services. These led to, a particular terminology called embedded finance. Embedded finance is nothing. It's about offering financial services by a non-financial services company or a technology platform. For example, probably few years back, the newspapers, for example, in Kerala, like Madhrubhumi or Malayalam Manorama, they used to offer insurance to their subscribers. You pay 10 rupees and you get an insurance coverage. The objective here was that as a newspaper which has access to, say, X million users, I wanted to deliver value or add additional value. Now today, if, say, these newspapers wanted to offer an insurance product, they can even launch a co-branded product. That is possible because of this embedded finance or open banking or API banking or whatever those jargons which you actually call for. And the enablers for this was firstly banks exposing their infrastructure or insurance companies exposing their infrastructure. And there's a lot of this third-party companies which is called embedded finance platforms or API banking platforms, wherein a Malayalam Manorama can just approach and get this APIs, co-create these programs and launch. Or let's take another example. If say, a gold loan company, let's say a Muthoot Financial Services, and just for the sake of an example, I'm taking this name. If they wanted to offer a savings account to all their gold loan customers, the moment when a customer comes for a gold loan, he pledges his gold, and then the customer is told that, okay, now sign up for a Muthoot Savings Bank account powered by one of their partner banks. And then the money is deposited into the savings account provided by Muthoot. Imagine the kind of value add which Muthoot can add to the customer, because even after the loan is over, Muthoot can actually cross-sell probably another loan product. They also has an opportunity to make an additional revenue from the float they actually generated from this, right? So for this kind of models is where today open banking / embedded finance is helping, wherein there are a lot of third-party platforms apart from the banks who is exposing those infrastructure to a player like Muthoot to launch a co-branded savings account. Now here, maybe the brand or Muthoot may not have a banking license, but a partner bank takes care of the regulations, the license, they sits on the bank. The other example could be, again, let's say if Nandilat Gmart want to say that, okay, hey, I wanted to launch a buy now, pay later credit card to all my customers. So the customers who are walking into my stores, they say that, okay, hey, is there a financing available for the fridge or a TV? Okay, download the Nandilat app, and they hand over a card from the store, the CIBIL checks, and after the balance checks, it's found that, okay, the customer is eligible for the EMI program. Now imagine like if Nandilat is able to offer this EMI to the customer, there is actually a loyalty or a connection that the brand is able to build. So after the loan is over or the EMI tenor is over, they can probably cross-sell, send a notification saying that, hey, the new iPhone is available in our store with zero interest, right? So these are, now imagine like few years back if Nandilat has to do this, they will have to approach a bank, and probably the bank says that I don't have the infrastructure to offer it on your name or your platform. But if today, when they go to a bank like a federal bank, or when they approach a embedded finance platform provider like Zwitch from Open or any of the players in this space, they can go live with a co-branded BNPL or a credit card offering in less than 2 months or 3 months. So this is where how open banking is creating a lot of newer business models and business opportunities. Now, by virtue of like enabling new business models and new innovation, this definitely improves the customer experiences. For example, today, maybe when I'm talking about this Nandilat co-branded credit card, when you're signing up, unlike a traditional credit card where you have to sign up for an offline form, here you can, just sign up online. Probably your PAN card, your Aadhaar get verified instantly within seconds. You did a video KYC, your CIBIL score or the bureau score get pulled instantly. Maybe some other data sources like maybe your social accounts or other things for the underwriting purpose can also be connected. And within 30 or 60 seconds, you are able to actually start using the card, right? So this is how open banking is like improvising the digital experience. Or in the earlier examples which I mentioned, like today a company like a Google Pay or a PhonePe is able to create a better user experience on UPI compared with the traditional banks. Now, in the next few years, in the next upcoming 5 years, we will see more non-fintechs offering financial technology services than traditional companies. For example, an FMCG company like an Hindustan Unilever or like a Procter & Gamble would wanted to offer supply chain financing to their distributors under their brand with an objective of adding value to their distributors to generate additional revenue and increase the profitability, right? We would see examples of like any larger platforms, probably social networks which has access to millions of customers' data, launching financial services. Best example is like we all know now WhatsApp has a UPI payment option, even though it's not popular. But that's another way of like, a brand, a platform with a sizable number of users thinking about adding value to customers or creating revenue model using open banking. And here again, like, they are creating a different, a better experience, even though unfortunately, probably it's still, the WhatsApp payments is taking its own time to actually scale up and take off. Imagine the kind of user experience when I'm actually chatting with someone and saying that, okay, hey, send me that. Can you send me that 500 rupees? And just the way, like, I am sending a photo, I'm able to choose, pay, and do the amount. Or in in a WhatsApp group after a group dinner, we are able to actually put that kind of thing. So this is how open banking is like helping in creating better experiences both for consumers and the SMEs.